Hello, welcome to Crypto Simulation Theory. Today, I am pleased to be joined by Mark from Polarity Digital Pro. This is a website that I discovered about a year and a half ago when I was surfing YouTube and was really impressed with Mark and Jay's data-driven approach to the markets and their really unique machine learning algorithms that drive their data analysis that has been astonishingly accurate at calling certain important moments in Bitcoin and the rest of the market's history. Before we get started, I just want to remind you that nothing that Mark nor I say here is intended to be financial advice or guidance for you in that kind of way. Always do your own research. This live stream is also being recorded and will be available for you to watch afterwards. So thank you for joining us. I'd like to introduce Mark. So Mark, tell me a little bit about your background and what got you interested in crypto and how you ended up co-creating Polarity Digital and what that site's all about, how people can join. I do have a link in the video description. Please follow Mark's YouTube channel and check out Polarity Digital so you can find all that information in the description. But yeah, Mark, welcome. It's a pleasure to have you here.
Yeah, well, thanks so much for having me on. I think we both share a love of kind of a data-driven approach to the market, and that's certainly what we're all about at Polarity Digital. So my background, I'm a data scientist. I actually got involved in crypto back in grad school. It was something that I, before that hadn't really paid much attention to. Then I kind of, through a friend, learned more about it and decided this is interesting. Is there a way that we can apply more kind of data-driven approaches to investing in it? And there were some people who, back when I first got in, it was at the very beginning when some people were trying to do more kind of data-driven or modeling-based approaches in crypto, but really didn't exist, at least in the public eye. I'm sure there were private firms who had their own quant models, but it wasn't really very established. And so that's where basically I was like, well, can I do something that would be useful? And so I started playing around, building different models, and it seemed like there was things that worked. And so then kind of the decision was, instead of just keeping it to myself, I kind of wanted to share it, see what other people thought. That ultimately then led to people being interested in having access, then started Polarity Digital with, along with Jay, started the site, and then we kind of fully launched our subscription model back in 2023, I guess it was, at this point. So that's been going well. I've been very pleased with how the models have done since their creation. It's always one of those things when you build a model that you kind of have to, it takes time to really let it go in the wild and see how it ends up doing. But I've been very, very pleased with the way that they've been working. And it frankly makes my job a lot easier, because it's not that I don't have to just sit here and kind of make up ideas of what the market's doing. It's basically, I just look at the models and whatever they're telling me, that's just what I think. It's very kind of simple from that perspective. So yeah, no, it's been a lot of fun, and I'm excited to chat more about the market and kind of what the data are suggesting now and where things might be heading.
Yeah. You have a very unique background, I believe, in the crypto space. And, like I said, one of the things I love about your channel back when I was on the hunt was just that you guys kind of have a no BS. You don't just shill coins because somebody's trying to put money in your pockets. You guys speak to what the data says and nothing more. And that's kind of how I feel that a proper analysis should be. I'm excited to get into the market. We have a bunch of people joining. I just wanted to acknowledge some comments. Joe, these are some people from Polarity Digital, Best in Business, and Zenotic with a little bit of a hello. So feel free, if you're watching, to leave comments. I will broadcast them live as we have time, and we can address those throughout the stream. So Mark, there's a lot of talk on crypto Twitter, our favorite place to get our analyses, about people are talking about Bitcoin being bearish, that this quarter hasn't gone the way they thought it should go. So I thought we'd start out by talking about Bitcoin. I mean, I kind of thought about total market cap, but we can kind of clump it all together with the different elements. So let's just talk with Bitcoin first. What are your thoughts based on what the data is telling you? And I'll go ahead and share your screen. Let you share your screen here and maybe you can tell people who aren't familiar with what they're looking at here, what they're looking at. But
yeah, definitely.
Heading into February, what are your thoughts for this quarter? Just whatever you want to share.
Yeah, for sure. So there's a lot that's been going on, and I've been seeing those commenters on crypto Twitter. Sentiment is very bearish right now. And I will say this is less of a data-driven thing, but just kind of a more general thing. I do feel like in general with sentiment, you don't tend to see everyone saying it's the top when you're actually at the top. And I think when we look also at just what the data are suggesting, we haven't really seen top-like behavior yet. So what I'm showing you right here is our main risk model that we have at Polarity Digital. So this is called our upside downside potential indicator, and there are 3 different versions. This is the long-term version, so it's more reactive to moves that play out over months to multiple months, so longer in its time horizon. And it tends to be relatively kind of surprisingly similar at different parts of the market cycle, at least in the past, where tops of the cycle tend to form when you get these really high risk levels and you're getting up above. So 5 is the top of the scale.
Mm-hmm.
When you're getting to about the 4 to 5 range, it's somewhere in that ballpark where you're going to be either at the top or very close to the top.
Mm-hmm.
But then also what tends to happen is that there are these notable intermediate tops that can happen in the middle of cycles that kind of happen in this general range between maybe 1.5 and about 3, somewhere in that ballpark. And this is something I was actually talking about a lot as this was happening, both here in kind of March, April of 24, and then also again when we went up here in December of 24, was that Bitcoin was kind of at a decision point then, that if history was a guide, this is kind of a point where if we were going to meet some kind of intermediate resistance, this tends to be when it happens. And then sure enough, that happened here. We cooled off, risk fell a lot. Then we had another push up, risk hit at basically the same level. And now it's been cooling off again. And I think the good news about that from a risk perspective is that we still haven't gotten to a super overextended point yet in the market cycle in terms of risk. It really tends to be the case, at least historically speaking, that the market really kind of gets away from itself and then can't support itself on the way down when you've gone to that full euphoric kind of super high risk point, and then the market kind of collapses and then there's not enough new demand to step in to stop us from going in a big bear market. I think this is in some ways a good sign that we haven't done that yet, because, you know, assuming no catastrophes happen, it just means that we're basically able to extend the cycle out for longer. That if we just continue to the upside in this push up here, I think we probably would have ended up at a lower ultimate destination than where I think the cycle top probably will end up being, given that we're kind of doing this more slow, methodical price action. So obviously you can't be hyper deterministic. I mean, we don't have a huge sample size to work with, but generally speaking, knocking those super high risk levels for Bitcoin has been a good thing in the past. And until we see something change from that, I'm just going to kind of continue having my base case being that we probably have more room to run. So I'll leave it there for now on the models. We can come back to some other ones that are also pointing at different things about the market. But that's one thing that I'm looking at that still makes me think that we've got more gas in the tank for this cycle.
Yeah, and looking at your UDPI long, I'm seeing a series of higher lows that have developed since, I would say, it looks like about sometime between 2022 and 2023. It looked like there was like a bottoming process. And do you look at trends in the UDPI long like that? Like, are you potentially anticipating another macro higher low to develop?
Yeah, that's a great question. So it is generally the case that in bull markets, you will see it kind of putting in higher lows and not getting back down to as deeply low levels as it did at the bottom of whatever the bear market was. And part of the reason for that is that really what the UDPI is quantifying is your upside potential relative to your downside potential.
Got it.
And in bull markets, you're just never going to be realizing the maximum amount of downside potential that you could. I mean, that would be like going into a bear market. And just kind of inherently in a bull market, it's an uptrend. Price is not going to just collapse to that degree where you'd expect risk to get to, you know, as low of levels. So I do think that that's probably a thing that could happen in the past. Now, it doesn't mean, I mean, in the past, for example, with this cycle, we did kind of retest at the same level twice before going up. So it doesn't mean that we can't get down to these kind of lower levels. But it wouldn't surprise me if each time we kind of dip lower on risk, and then eventually whenever we put in that kind of big ultimate push, it would come from a bit of a higher bottoming point on the UDPI than it did before. So it's not something I put like massive stock into, but it is a thing that I would generally expect that to happen. At least a healthy bull market should do that. If you suddenly see price really collapse and the UDPI kind of start breaking down from that, that might be a little bit more concerning that you're actually able to realize so much downside potential.
So seeing that the UDPI long is looking fairly neutral right now, there's really nothing that remarkable about it, despite what people on crypto Twitter are saying. You still remain bullish, is what I'm hearing.
Yes, I do, and there are other reasons for that as well. Actually, I'll just bring up one more model here.
Yeah, go ahead. Help yourself.
I'll just do it here. So this is actually something that we have on the site. Is this kind of like community charts feature where people can share different charts? And one of the ones that I shared over there, and I've talked a bit about on my channel and also over on X, is our market cycle model. So this one's a little bit different than UDPI. It's basically trying to quantify or capture as quickly as possible when you've exited a bull market, entered a bear market, and then when you've exited a bear market into a new bull market. And so it does a pretty good job of doing that, actually, like very good job for most of these cycles. And one of the reasons why I got so bullish back down here in early 2023 was this model flipped bullish. And you'll notice it's remained bullish. Basically, if price is above this blue line, then that would suggest that you're in a bull market. And it's still giving Bitcoin a lot of leeway here. Like the critical level for this model is still only just under 53K, so well below current prices, and then current prices all the way up here. And what tends to happen with this model, at least in the past, is that it'll give a lot of room to price, and then at some point, it's going to kind of decide, like something's looking different now, and then it will get a lot closer, and then when price breaks below it, then it will flip bearish, and then into the bear market you tend to go. And so we haven't really seen signs of that even happen yet, where the model hasn't gotten scared yet and start, shooting up to the upside like it has in the past. And so what I'm seeing here is just kind of business as usual. I mean, price is a little bit closer to it than it was, for example, in this cycle here, 2016, 17. But in some ways, I think this is maybe the most kind of, if I had to pick one cycle that this price action looks most similar to, it's sort of like a stretched out version of this cycle here. And so far, so good, basically. So as long as this model is remaining bullish and I'm not seeing other models looking bearish, I see a little reason for me to flip my overall outlook to bearish at this point.
Yeah. Well, thank you for sharing that. I'll share a little bit of perspective too. So
yeah. Interested to hear your thoughts and if they differ from what I'm seeing.
Not really. They don't differ. So what you're seeing here, and again, I'm more focused on trading view stuff. So I have some fib levels pulled up that correspond to the swing high and swing low of the 2021 cycle top in November, and then also the market cycle bottom. So that's how those were constructed. I think I actually have Heikin-Ashi candles. I have Heikin-Ashi candles on. I guess I'll leave those on.
Oh, okay.
I didn't mean to, but might as well. And then this band that you're seeing, the yellow, blue, white, and red, these represent moving averages, but they're not SMAs. These are HMAs, or whole moving averages, HULL, and they are formulated to be less lagging than SMAs or EMAs. So I enjoy using these because I find that death crosses and golden crosses actually mean something when it happens with HMAs, whereas with SMAs, whenever you've gotten that cross, it's so lagging, it doesn't really mean a whole lot. So
right, exactly.
What I'm seeing in at least the short term is that we are having trouble getting above the 20-week HMA, which is currently sitting just above the 1.272 fib, around, we'll just call it 103.6K, which is like exactly where we're at now. Sorry, my camera does this. Yeah. So I've been very eager to see how this week closes, and I just haven't really, like, I try not to go with the day-to-day for Bitcoin, because if you get too lost in the noise, it can really shake you out when it doesn't need to. So I noticed that we were holding this fib level pretty nicely throughout the week and staying above 100K. I noticed a golden cross of the 50 and 100 week. This happened in mid-December, and it's not unusual at all to kind of come back and retest these moving averages and get them sorted out before you really take off. So my very short-term thoughts is potentially some more crabbing as we head into February, but I'm still quite bullish on Q1. I think Bitcoin is likely to have a breakout, potentially by the end of Q1, that takes it to somewhere, and I'll just say somewhere between the 1.414 and 1.618, which would correspond to 128 to 174K. And I've got other thoughts and reasons why that is likely to happen. But something I did notice recently is you'll see like contracting volume kind of happening on a much larger scale, suggesting potentially, a much bigger move coming potentially this year. And this metric here is called the wave trend in the middle. This has actually just flipped bullish. It printed a bearish divergence dot. This is all on the weekly time frame. And you can see it kind of just barely scraping out some green here. So again, we'll see how the weekly closes today. The weekly close should be in very soon. And down here is the ADX and DI. I'm not sure if you're familiar with this. This is a pretty pretty common metric that
Yeah, I
software.
don't know if I've heard that one before.
Yeah, so average directional index. So this white curve is the trend, overall trend strength. Anything above 20 is considered a strong trend. The higher up you go, the stronger the trend is. And you can see these peaks usually occur. This one occurred in April 2024. So they can coincide or correspond to a major move in the market. And we got like a head and shoulders pattern on the wave trend as well, suggesting that some kind of top was in back then and we needed to cool off. Similar thing to what your UDPI models were showing. And we're heading back up again on trend strength. But what we have now is this green directional index is kind of heading down, and the red is also heading down. So things are kind of neutral in that sense. You want to see green diverging away from red. I wouldn't say that it is at the moment. It's just kind of going flat. But my anticipation is that we'll see another, upward spike that should correspond to Bitcoin being able to finally conquer the 1.272 fib. I did anticipate we'd hit some resistance here. Another metric that I have to kind of show how we've exited one parabolic leg and we're kind of waiting to start another. Let me see if I can turn off the fibs real quick. So let's go and do that. 1 second. Oh, okay, I don't know. I guess I'm trying to rename it. All right, there we go. Okay. So this is the Parabolic StopIn release, or Parabolic SAR. And so you'll see these like blue dots. And so you can see how they start out with like this concave up motion, indicating a parabolic trend, and they start to go concave down, indicating it's kind of coming to an end. And we now have downtrend dots. So this is the third downtrend dot we're getting this week. And these don't have to be dramatic. These can simply just be like, I don't really consider this a downtrend. I just consider it a consolidation. I had projected that we would head down to 84.5 to 88.5K potentially. And we got close. We were within a few $100s of that. And then we're reversing course. So to me, this looks pretty bullish right now overall, this formation. The Heiken Ashi has a clear green candle body with an overshadow. So yeah, I mean, I'm not too concerned. Just like you, I feel that at least as far as Bitcoin is concerned, things look good. And this consolidation after a run up, like what we had from September to December, is expected, and it could go on for a little bit longer. It could take us into February, and that's fine if it does. I mean, I don't really care. I feel like it'll just buy more time, and these periods of cool off are good for the market. So it prevents things from getting too overheated too quickly. We do have a question. I think this is intended for you, so I'm going to hand this over to you from Zenotic. He said, do you think swing trading is possible or practical with Polarity tools, or what is the shortest investing divesting possible with the tools in your opinion? It's a really good question. So
yeah, that's a really good question.
Hand that over to you and put your
yeah, definitely. It's a great question. So I do think it's possible, although it wasn't really the main focus when I was first, kind of developing some of these models. Let me actually just pull up a few different things that can be looked at. Actually, hold on. I might have there's a chart I should have that I think actually shows this even better if I actually saved it. I don't know if I did. All right, never mind. I'll just talk about this one. So there are a couple different models that I think are useful on shorter time frames, and part of the idea with swing trading is also, though, being okay with not capturing the entirety of a given move. At least in my view, I do think that sometimes when it comes to short-term trading, I think it's easy to kind of fall victim to this thought that, like, I'm going to be short-term trading, but I also want to capture the entirety of a macro move. But kind of inherently with swing trading, your buy and sell triggers have to be a little bit more kind of less firm on that macro sense. You kind of have to be okay taking profits and not necessarily capture the entire part of a move. So there are a couple different models that are a little bit more reactive short-term that I think, especially going together, can give you some useful insights. So one of them is the trend confidence indicator. And this is actually somewhat like that trend model, although I forget the name of that you were just showing. But it's this kind of idea of, like, what is the strength of the trend?
Oh, the ADX and DI.
Yeah, there we go. That one. Although, yeah. I mean, the TCI might be slightly, I mean, the construction is definitely different. One of the things that you'll kind of notice with the TCI on shorter term timeframes is that divergences can play out in pretty notable fashions. Like, for example, going into 2023, we got this pretty extreme upward move, very rapid upward move on the TCI before even price started reacting. And then, price ended up shooting up. But then when you saw the TCI start moving down kind of really aggressively, it suggested that we're getting a bit overextended. And then price slowed down. And it wasn't until we got another reversal, kind of extreme reversal, that price ended up moving up. And one of the things that you can actually do here is you can look at it on its own, but I've also kind of found some utility in pairing what the TCI is doing with what the short-term UDPI is doing. Because oftentimes when you start seeing one of those bullish divergences on the TCI, when you're also seeing risk being very low, that tends to be more likely to play out to the upside than if you're seeing one of those divergences play out when, for example, short-term risk is already getting up relatively overextended. That's where kind of you want to be more critical or maybe skeptical of potential divergences that are playing out. And then vice versa. If you're seeing bearish divergences play out, but risk is already very low, you might take that with more of a grain of salt than if you're seeing a bearish divergence start playing out as risk gets higher. And so I like to pair these together in the short term. This is something I tend to follow, and I post about a decent amount, where it can give you just kind of an insight into where the market is. And if you're seeing a combination of low risk and bullish kind of behavior on the TCI, kind of growing strength, then that can be a sign that things are building up and ready to go. And frankly, if you would have done that with these last few times, you would have ended up working out fairly well. I think if you'd been buying these dips on low risk when you start seeing a bullish TCI, then that has worked out very well. Now, I'm not going to say this is going to work out super well necessarily in a bear market. It's also important to know what kind of market you're in. So I think in a bull market, you can kind of really lean on that, where low risk bullish TCI is a good sign short term. High risk bearish TCI is a pretty bad sign short term. And you might, if you wanted to, you might be able to swing trade something like that. Though I will caveat this, I've not done extensive back testing, so I don't have figures to know exactly how well this holds up in a bunch of different conditions. But if you're in a bear market, that's when it gets quite a bit more risky. And in fact, what you might do is the opposite. You might actually take more of the short side where you don't even play the long side, and you're just doing kind of the exact opposite through that whole point. And that's where I think having models like the something like the MCM and some of our other models that give you a better sense of what kind of market are you in can then tell you, if you were to do shorter term trading, what bias you should have in that trading. So to kind of wrap up that question, it wasn't the original kind of intent or design of those models we use for super short-term trading, but I do think they can give you useful short-term information, especially when combined with that macro understanding of where you are in the market cycle.
Yeah, great answer. I think what you're basically saying is, theoretically, this is how it should work out. Try at your own risk.
Right, exactly. Yeah. Definitely no advice one way or the other.
Yeah, exactly. Not financial advice. So I wanted to go back to, hopefully that answers your questions, Anodic. Let us know if it doesn't. Hopefully, I wanted to go briefly back to Bitcoin and show you a couple of things that I found interesting. So I constructed a regression channel. It's a linear regression channel with two standard deviations in either direction from the median line here, and this goes all the way back to, it looks like, June of 2022. This is a very strong channel. It has really held up well over that period. I mean, we're almost coming up on, I guess we're on a year and a half of this channel holding. I'm going to turn off my Heikin-Ashi candles. They're annoying me. Yeah, we'll just go throw on some regular candles here. So you can see kind of where we are right now. We came back and tested the median line of the channel. And so, we didn't exactly have like a fierce bounce off of it. And it's not clear if we're going to come down here and touch it again. But as your models show, and any mathematical model shows, when you get a number of standard deviations away from the mean, you're most likely to come back towards it in either direction, whether you're overextended or you're underextended. So I found that kind of interesting. And then if you overlay this, and sorry, this looks really disastrous, but if you overlay this with, this is a risk metric developed by a guy I follow on TradingView, XPanPanBTC, I think is his name. And he recently constructed this risk metric. And you're basically seeing sort of what he would consider the lowest price that Bitcoin would be likely to go in, like, say, a bear market right now. It would be somewhere around 36.5K based off, of course, logarithmic regression.
Right.
The highest to him, an overheated market would be if we started to get towards like 160 to 188K. And that lines up pretty well with what I feel would definitely be an overheated market. And it's interesting because we've kind of pulled back around 60 risk. So we spent quite a bit of time, and these numbers have gone up obviously over time. we spent quite a bit of time in 2024 kind of waffling around between 30 and 40 risk. And then we had our breakout. And so it just seems like we're yet consolidating again. And this gives me a lot of confidence personally, seeing us at the median line, seeing this channel hold for 2.5 years, that we still have, a ways to go. Now we could rocket off in Q1, surprise, way up, up here. I don't think that's likely, but I mean, it could happen. There's a non-trivial chance that it could. So I just wanted to show you this risk metric that I look at. That's, also fit to like quite a bit of data. So
yeah. And actually, one thought, and I'm curious to hear your reaction. One of the things that I was thinking about as you were showing this, and in reaction to like the regression channel that you have there, one of the things that, going back to kind of using 2016, 2017 as an analog to what we're seeing right now, one of the things that was interesting there is that we actually did a similar thing in the early part of that cycle, where we kind of just went in a pretty linear, on a log scale, linear channel kind of up. And then it was when we finally kind of broke that to the upside, where really the parabolic phase happened, but also the cycle top then was not super long time ways away. It was kind of like that early warning sign that you're in a new part of the market cycle and that you kind of wanted to pay more attention.
Yeah.
I was curious your thoughts with that. Like, do you think that if we were to break out of this channel to the upside, that might be kind of an early signal that we're entering into a different phase, and that we might, on a temporal perspective, want to be a little bit more paying attention?
Absolutely. That's an excellent question, Mark. And that is exactly what I anticipate to be likely to happen. No channel is going to hold forever. So this channel will break, just like the downtrend channel broke when we entered into this channel. This upward, very slow build, I think it will break. I think it's likely to break potentially this year. I don't know when this year. I have no clue. But yes, when we start to move more than 2 standard deviations away, which I think, like I said, I think it's going to happen. In fact, if we were to do that, let's say in Q1 or Q2, I would probably be thinking we're near a major market cycle top, to be honest with you. I think the pi cycle top indicator would probably trigger. I think, which just like it did in April of 2021, that was a significant top, even though it was not the top. Probably would see MVRV and other, topping metrics really start to flash. And we would expect that things might get crazier before they start to settle down, because mania moves are just insane. Could we get 3.5 standard deviations? Who knows? But yeah, that would also correspond to the formation of a new channel. And whether you wanted to add a standard deviation to this one, I mean, that would be kind of a very weak channel, or you just want to say, okay, we've started a new one. That I would expect that to collapse, within probably a few months at most. So
right.
Yeah, that's a great question. Those are sort of my thoughts as far as that's concerned.
Yeah. And this is another question. I mean, this is less on the technicals, and this is just more of a kind of going back to when you originally kind of brought up CT as the foil of everything that they're thinking about. One of the other things that we're seeing I've seen a lot of people talk about recently, is this idea of dilution within crypto. I mean, this would obviously be relevant to altcoins, but I'm curious of your thoughts about it relevant to Bitcoin, because I was thinking about this recently. So basically the argument is that there've been basically like an exponential expansion of the number of crypto assets that exist, especially with like Pump.Fun on Solana, all these meme coins. We're in the many millions of tokens that now exist. And one of the things that could be a concern there is dilution of liquidity, that it would be kind of harder for any given asset to have as much of a parabolic move now than in the past, because there's just so many other things that people might dump their money into instead of, for example, Bitcoin. Yeah. So I'm curious of your thoughts of that from just kind of like a broader market dynamics perspective. Like, do you think that Bitcoin has kind of established itself as being separate enough from crypto that it'll be relatively immune to that issue? Or do you think that that is something that will continue to kind of beat away at Bitcoin's, for example, you have Bitcoin dominance here, like its ability to hit the same targets it's hit in the past?
Really excellent question, Mark. So I do think about this, and I think that Bitcoin is here to stay. I don't really, is Bitcoin getting diluted? Yes, it is. And I think that's a good thing for the space. I mean, if all the space has is Bitcoin, then we're not really maturing. So you can see with Bitcoin dominance, I call this sort of like an extended an extended saxophone. It just looks like a saxophone to me. That with each cycle, it's getting, less and less volatile. And that's just telling me that other things in the space are starting to eat into Bitcoin's market share. It's actually hugging the 618 fib right now, which is a very common fib level to spend some time, doing stuff with in a potential dead cat bounce or bear market rally. I mean, it's not proven to be that yet. So yes, I mean, to answer your question, I do think that over time we're going to see the space mature, and that should correspond to Bitcoin dominance entering into a tighter and tighter range, and potentially being a little less relevant, further out in the future. So that yes, and in fact, I don't think it's just Bitcoin. I think also if you look at ETH Bitcoin too, you're also seeing. I mean, I guess I could pull up Ethereum. Maybe Ethereum dominance would probably be better. Come back to ETH Bitcoin. But yeah, with Ethereum too, I think the same thing is going to happen. I mean, you're seeing I'm gonna recover. Well, I'm not say recovering yet, but I'm still an ETH maxi in some sense. I really love Ethereum and what it does for the space, and maybe I'm a little biased towards the network compared to Scamlana or something like that. But sorry to the Solana lovers in the chat. But yeah, I think the same thing's going to happen with Ethereum dominance, where it's just going to kind of start oscillating tighter and tighter, and that's good for the space, in my opinion. And it doesn't. I think the dilution of the space away from Bitcoin and Ethereum as being kind of like the only things that matter. I hope that happens. I hope that continues to happen. I hope things like Chainlink and other projects like Aave that have improved tremendously over the past few years. I'm not talking about our tokenomics, or anything like that.
Right.
Chainlink's tokenomics are deplorable, but as far as what it actually does, the Oracle aspect or the RWA aspect of things like that. It's good for the space, in my opinion, to see Bitcoin dominance and Ethereum dominance dilute. And yes, I think that will happen. I think there'll be, tighter and tighter ups and downs. That's kind of what I imagine. Is it asymptotically approaching something? That's kind of what I wonder. I guess time will tell. That's kind of my thought, is that there'll be kind of like a oscillation that decays with time.
Right. Yeah. Yeah. No, it's interesting. And I also kind of wonder if the market's going to kind of keep being more mature in terms of differentiating the use cases between these different assets, and then them becoming eventually, hopefully, less correlated with each other. I think one thing that was actually, I think, kind of telling about the way that the market views Bitcoin versus a lot of, actually, frankly, Bitcoin and Ethereum versus a lot of the rest of the market was when Trump coin first got launched. Anyone watching the markets of that, it was very interesting. And just that Bitcoin kind of didn't do a whole lot. It kind of hung out similar to where it was. But then you saw people just dumping everything else they could get their hands on to buy Trump coin. And what it suggested to me was that they're probably just very different types of holders who are holding these things. Bitcoin is, especially now with the ETFs, it's being held by people who aren't just going to dump it to buy some, meme coin, even if it's the president's meme coin. And then Ethereum, I think, also was relatively muted. I think it did have some reaction, but it wasn't nearly as extreme as a lot of altcoins. Then you really saw the altcoins dump. And so it kind of suggests that it's really the people who are more on the, further on the risk curve, a bit more on the degen side, looking for higher returns. They're the ones who are very interested in that. And it wasn't really the Bitcoin side, which was hopeful. I think it was frankly a good sign. It suggests, I think, more maturity, as you're talking about, that we actually are getting to a market where people are able to distinguish between them, and it's attracting different people, which hopefully then eventually might make them less correlated to each other, which I think in some ways as a trader, that's ultimately what you want. It's kind of hard to be a trader of different assets right now because they tend to be so correlated with each other. If down the line we have a lot more decorrelation, it actually makes things a lot nicer, a lot more variability you can play with.
Yeah, I don't even know how to analyze the Trump coin at this point. I was just pulling it up. It was a curveball that was thrown at us for sure. Not what people were expecting, and I actually thought it was fake when it first came out. I'm like, oh my god,
also,
Trump's Twitter got hacked, guys! Don't buy this thing. But the tokenomics are pure garbage in my opinion. I didn't touch it.
Yeah, for sure.
And I won't touch it. Do I think that Trump coin could be here for a while? Yes. Do I think that it was a significant liquidity drain, as maybe crypto Twitter and others were making it out to be? No, I don't. I could actually go there are these events that happen, and I think one of the things I looked at that night, I don't remember if it was others dominance or what, but we did have a drop. But in the grand scheme of things, I don't think it was like as dramatic as people may have made it out to be. I don't think altcoins are dead now. I mean, obviously this is a 1 hour chart. Yeah, I had to go down to the 1 hour I was like, this doesn't look right. I had to go down to the 1 hour because of Trump coin is so new. You can't really analyze it on a weekly time frame. So yeah, if I look at like others dominance, I mean, what has it really done? It's put in a macro high or low. It's hanging out at the 236. And I anticipate this metric will likely turn around to the upside sooner rather than later. We always see these shakeouts into huge pumps. I mean, that's just kind of what happens,
Right.
Market, so I know this wasn't really a question or anything, but just the Trump coin to me, people were calling it an altcoin black swan, and so I made a video called "Black Swan Be Gone," but it was so short. It was really so short lived, and I feel like you can see how much Trump coin has retraced since its debut. It still has a significant amount of market cap that could have been in other altcoins, but I think something was bound to happen regardless. I mean, we usually see Bitcoin dominance is kind of being sticky right now, and we're waiting on the Fed to, announce what they're going to do. I think most people think they're going to pause rates, and I mean, CME Group, call them participants, people who were surveyed. Last I checked, there was like a 99.5% probability of a rate, freeze. So I don't know. I mean, I'm not too worried about altcoins from something like that, from that event. It sucks when you hold them, but there's a question. I believe this is probably for you, Mark. Can you build some time series models as well?
Yeah, it's a good question. I mean, I'd be curious to hear kind of exactly what you have in mind from that perspective. There's a variety of different models you can make. And of course, when it comes to something like crypto, of course, time series, there's a whole family of different time series models that you can make. And I've played around with some of those different things as well. So I guess the short answer would be like, certainly, for sure. I think if I were to find one that I thought was interesting or added new kind of perspective or alpha, it's definitely something I'd look into to adding, and something I've played around with as well. I just haven't come across something yet that I feel like is really good enough that it's worth adding to the site. But they come in all shapes and sizes. And so in some ways, time series model that I might not think is all that interesting, other people might. So I probably just need a little more context on that, but it's certainly something I've looked into. And if I were to find one that I find interesting, I'd be interested in adding it.
Okay, so hopefully Banana Republic 2039, that helps answer your question. Let us know if you have any follow-ups to that. So I have another question for you, Mark. I wanted to get your thoughts on the elephant in the room, and it's Ethereum. So I have the Ethereum Bitcoin chart pulled up, and we're seeing the sentiment on Ethereum really at, I would say, I won't say all-time lows because it seems to happen every cycle, but at, we'll just say cycle lows, maybe is probably the right way to say that. Everybody's just fading Ethereum. They're saying that layer ones like Sui and or Sui, I'm not sure how to say that. They Solana, et cetera, maybe Aptos, I don't know, have sort of eaten away at Ethereum's relevance in the space. This is what I hear on crypto Twitter, and I see even sometimes comments within my own Telegram or in Discord groups. Don't expect much from Ethereum. That's sort of like been the thought. This is the Ethereum Bitcoin chart. It has admittedly gone to the depths of hell. I had this red zone between 0.03 and 0.04 Bitcoin I drew on here when I first started the channel about a year ago. And we certainly bled right into it. And that's where we are right now. I could pull up a VRVP as well, but there's like brick wall support at 0.03. So I didn't really expect we go much further below that. And that's pretty much where we wicked to about a week ago. And there was a pretty nice volume spike. I actually turned off the volume on here. Put it back on, I guess. So what are your thoughts on Ethereum strength against Bitcoin? I'm curious to hear, do you believe that the same thing that always happens is going to happen again, where ETH has a hated rally and all the ETH altcoins along with it. I mean, we're seeing some strength out of Link right now.
Yeah, it's a great question. So I kind of, especially on a question like this, I kind of tend to default to I'll believe the trend break when I really see it.
Okay.
Kind of would be my my initial response. So actually, one thing I can do real quick here. Let's see, where do I have? I'll just pull up. I'll just pull up, for example. This is one that we can look at also. So this is our forecast model. This one is trying to basically give a probability of like how likely is it that the asset will be up 6 months, looking at like 6 months out, roughly speaking, versus not. And so you'll see how it gets really bullish during these kind of uptrend parts of bull markets. Then it can also, you know, roll over going into the downside. Now, there's something that happened with Ethereum over here that it wasn't super happy about, especially as we kind of went up to this local top, but since kind of rebounded. And so
this is
until
USD.
this is just Ethereum against
Okay.
USD. Yeah.
Okay.
I don't have one of these for the Bitcoin pairing.
That's fine.
But just talking about it against USD first, like the model still remains bullish, and I think what really a lot of people have been worried about is just that this hasn't been what they expected from Ethereum in this cycle so far. But kind of going back to what I was talking about, like until we see something very clearly change from that perspective, like we go a cycle where ETH really does just fail, it's kind of hard for me to really bet against it not having some outperformance of Bitcoin at some point. I can't say that I'll know exactly when that's going to happen or that it'll be nearly as impressive as it has been in the past. But especially when you get sentiment to be this bearish, that can really lead people to be mispositioned in certain points of the cycle, especially if you get a place where people are shorting Ethereum actively and very few people are long. That can be where you can at least get some, some decent upside that might have it go against Bitcoin. And I think part of it's going to depend also of what Bitcoin does, frankly. Like, it wouldn't surprise me if we see ETH BTC bleed more.
Yeah.
But then, especially as like Bitcoin go on a big run, but then you'd see profit taking flow into Ethereum. I think one of the things Ethereum has in its advantage, at least right now, although this could change soon, is it of course has an ETF, whereas a lot of other assets don't. And so if a lot of those Bitcoin, ETF holders decide to take profits after a big run, the easiest thing for them to do is just dump it into an Ethereum ETF as the next thing. And frankly, I think the type of people who own the Bitcoin ETF might also be a little bit more risk averse. It might be more appealing to buy Ethereum being the second biggest rather than some random altcoin that might get an ETF down the line. So I think there are different scenarios that could certainly play out that would happen. I do think it's been a bit of a widowmaker trade so far to try to call the bottom on ETH BTC. So that's why at this point I'm not going to claim to know when that's going to be. But it would shock me, frankly, if there isn't at least some point, especially if Bitcoin goes on a big run, where Ethereum doesn't have some outperformance, really catches people off guard. And then, you might get some, bandwagoning as people try to catch up. That's kind of my initial thoughts.
Yeah.
Although I do think, and I'm actually curious to hear your thoughts about this piece. One of the big narratives about Ethereum that's been going out is basically L2s being parasitic, that we have so many L2s out there that are siphoning liquidity potentially off of Ethereum, that if Ethereum just hadn't gone that direction and had tried to maintain all that kind of value, on-chain value to itself, it would be doing better. I'm curious to your thoughts on that one, because I think that's an interesting, nuanced conversation as a ETH Maxium kind of.
Yeah, no, that is a good question, and one I have thought about. So back during the last, when Ethereum first came out, there was Ethereum, and I know that Vitalik actually had an idea similar to what later would become Ethereum back when he was really interested in Bitcoin many years ago. And so, there were a lot of issues that came along with ETH when it was first released. And, as it's become more decentralized over time, these issues, and as time has just gone on, these issues have been addressed with a lot of VIP updates. The first, at least popular layer 2 that came out was Polygon. And I've been very disappointed in Polygon's performance this cycle. I mean, surprisingly so. I kind of abandoned it. I mean, with the AG layer, rollups, and everything like that, it sounded great, but there's definitely an oversaturation of L2s. It seems like every chain has one now. Probably the most recognizable L2 is Base. I think the Base ecosystem has really taken off. is still, you know, Aerodrome being sort of the primary AMM on base. But my thoughts are similar to your question on Bitcoin. I think Ethereum itself as an asset is likely to be diluted over time. I do. I think Ethereum dominance is going to go down with time and asymptotically approach something. I don't know what that number is going to be. So yes, I do think that layer twos are diluting the space. At the same time, I think a lot of these layer twos are garbage and likely to not be around. I think the best layer twos will come. I think, you know, Base is likely to survive this cycle. Base doesn't have a token. I mean, it's you know, the closest thing to a token on Base is Aerodrome, but yeah, I do think there's too much dilution in the L2 and even the L1 space, and that it is eating away at Ethereum dominance. And I don't expect Ethereum to make a dramatic move against Bitcoin. Let me be clear about that. I don't expect any vertical crazy moves in ETH BTC. You know, there's this long-term trend line that I've been paying attention to, and it goes back many years. I mean, I quite a few years. This is a very long-term trend line. Sorry, I have too many things on screen. Let me turn off my fibs. Okay, there it is. Let's just turn that off. Got way too many things going on here. Anyways, so I feel like we're gonna see some kind of mean reversion bounce sooner rather than later. We're very underextended from the red Gaussian channel. So the odds of a mean reversion happening just keep increasing with time, especially if you believe that Ethereum isn't dead, which I don't think it is. I think this long-term trend line that used to hold as support is likely to now be resistance. So meaning that ETH Bitcoin as a ratio or as a trading pair, however you want to look at it, is likely to potentially become kind of an oscillator. You know, people talk about the flippening. I don't think it's going to happen.
Yeah, I mean, yeah, I think I'm with you on that one. And it's especially because, as you're saying, the L1 space is just becoming a more and more competitive marketplace right now. And for any chain to really be able to dominate to the degree that they could flip Bitcoin, I think something pretty extreme would have to happen for that to take place. Yeah. So I think at this point, it's probably not in the cards.
Yeah, like a quantum computing hack, or which, you know, anyways, I mean that sort of hyperbole there, but yeah. There's a question for both of us that easily could take up probably our remaining time. We do have to leave fairly soon. I want to respect your time, but Mark and Snake, when analyzing altcoins, do you tend to compare it to Bitcoin / top coins total market cap? I'm guessing it's referring to total market cap or maybe total 3 as a relative strength indicator, or do you tend to review the alts chart more independently? So I guess I'll get your take on that question, Mark, and I can add my thoughts.
Yeah, it's a great question. So I think there are different approaches I take to this question. So I feel like when I'm just trying to get a general view of the market, what I'll tend to do is look at Bitcoin, or just look at the Bitcoin pairs, basically. So I don't have. Actually, I can quickly just make this real quick. So for example, like if I were to be looking at, I guess Solana is an interesting one. So like if I were to be looking at the Solana chart, what I would tend to do if I wanted to get a more global sense of like how is it holding up relative to the market is usually I'll just look at its ratio against Bitcoin. So like if I, for example, using on our site, we have this workbench, so you can create custom things. So you can do any ratio, anything like that. So if I just want to get kind of a general sense of it, that's what I would do, is I would look at it against Bitcoin, because Bitcoin tends to lead the way, and total market cap tends to kind of go the way that Bitcoin is going, since Bitcoin tends to make up such a big chunk of it. And so if you want to just get a sense of, is your asset kind of underperforming kind of the baseline, I think I would kind of view Bitcoin as the baseline. It's kind of like the quote unquote safest asset. Are you beating the safest asset or not? And it can give you some useful information. And if things are really bleeding heavily against Bitcoin, and especially if they've been doing that their entire existence, that might be a sign for concern that this thing's really not able to keep up with that broader baseline for the market. But if I want to know more specifically, is this thing a good thing relative to, in a category, the baseline, then I would do something like, for example, if it's an L1, maybe I compare it against Solana, which has done extremely well this cycle. So you're talking about like non-Ethereum L1s. I might benchmark it against that. Or if I'm in the AI space, maybe I benchmark it against something like FET or like Render or some of those. And that can just give you some very pointed kind of comparisons where you're like, whatever you see the baseline is, or whatever the largest market cap asset is, or whatever in a given space, you can see like, is taking on the additional risk that comes with a smaller market cap asset worth it, or has it seemed to be worth it when you kind of look at the broader trends? And so it's not the only piece of information I look at, obviously, but it's one thing that you can just tell of how it tends to stack up in the market. And my personal view is that if it can't beat the kind of standard, then it really kind of questions how appealing of an investment is, certainly in terms of any kind of scale or size. You might have short-term theses of why it should outperform, but broader term, it becomes a lot harder for me to justify if I'm seeing it just having just carnage across its existence against some more kind of baseline asset. So those are my thoughts. I'm curious to hear if you have a different kind of take on some of these things, but that's how I tend to use those pairings.
Yeah, I mean, I don't really have that much different of a take. So I pulled up one of the strongest altcoins of this cycle, which is SWI or SWI.
Mm-hmm.
I never know if I'm saying this correctly.
Yeah.
So a brand new layer one on the block with some really strong backing. One of the strongest runners of 2024 by far. And so I have a custom Bitcoin pair strength indicator that was created by somebody in my Telegram group.
Nice.
And yeah, it's kind of like the Mansfield RSI, so but specific to Bitcoin, and you can see what a run SWI had. So I mean, against Bitcoin, it certainly made sense to hold SWI because you were going to have a better risk to return reward ratio. And I agree, like it just depends. So what asset is running hot? You know, if Solana is the asset that's running really hot and it's outrunning Bitcoin, then you probably want to compare your asset to Solana. If it's Ethereum, compare your asset to Ethereum. You know, if you're swing trading, you may want to compare one asset against another. But I think we always do have to bring it back into perspective that if you decide to hold an altcoin that, you know, and there's so many of them, you have to ask yourself the question, okay, this is obviously more risky hold. So while there is probably a larger upside potential return, there's also the potential for outsized losses that you would not have with something more stable. So my answer is very similar to yours, Mark. I don't really feel like there's, maybe I would look at different metrics because, you know, I have a slightly different, I don't know. I mean, I feel like I have the same way of looking at things as you, honestly, just in a different language or something.
Yeah.
So yeah, I don't really have much I could really add to that, you know. It also depends where we are in the cycle too. Like if Bitcoin dominance is running hot, you know, and it's not really about the level that Bitcoin dominance is at, because altcoins can run while Bitcoin dominance is going up, and you can actually miss a lot of good moves if you just trade in a very, like, you know, one-dimensional kind of way. But when Bitcoin dominance is like rate of change is like really high to the upside and just kind of going parabolic or something like that, you may want to think about your altcoin positions. Like might be a good time to start looking at them and seeing which ones are holding up really well. But you know, holding Bitcoin in that situation is certainly going to be, in most cases, more advantageous. Again, not financial advice, to probably your overall rate of return at that, you know.
Yeah, and maybe where we can kind of wrap up our conversation is kind of talking about alts a little bit more. And I'm curious to get your take on kind of your longer term thesis on altcoins. So kind of looking not just within this cycle, but kind of looking beyond that, what you think it's going to look like, especially in the face of what we've been talking about with all this dilution and things like that, of how you kind of see that space play out over the next year to 4 years, let's say, kind of general time frame.
Yeah, I mean, it's a really great question. And before I answer that question, I just want to let people know we are kind of wrapping things up. So if you have any last thoughts or questions, please get those into the chat and we'll try to address whatever we can. So the way that my answer to that question is, I guess we all kind of have like our own perspective on what crypto should be. I see crypto developing and maturing and getting regulated probably in time for, I think it will be more regulated and more mature in time for the next bull market. So I don't know if this 4-year cycle thing is going to hold forever. I mean, it's kind of a little bit of confirmation bias, but it's justified somewhat through the halving, although the effect of the halving seems to diminish with time. Honestly, I think the global liquidity cycle matters a lot more. So I think the altcoin market is going to mature and you're going to see more you're going to see diminished downside in projects that have enduring potential, and you're going to see a lot of the garbage start to get cleansed from this space, especially if we get like a more prolonged bear market or something that comes.
Right.
You know, a lot of the crap will just be flushed down the toilet like it should be, like the pump fund garbage and base meme coins that last for like a day. And you'll see, okay, these are the true survivors. And you're already seeing some of this happen with, like, Chainlink's a great example of what started out as an oracle and has become so much more than that. Now, Chainlink, the token, is it that exciting? No, it's not. Chainlink's market cap's making, you know, new all-time highs sometimes, and the coin price isn't because of dilution. But
right.
I think Chainlink as an asset, if you're thinking like really, really long term, like you have like a 10 to 15 year time horizon, you probably can make some decent money on it. I mean, could you outperform Bitcoin? I don't know. But I think that the space will need oracles. So in that sense, I think, yeah, Chainlink will probably still be around. Some of these layer twos might become obsolete at some point, or maybe they won't. I don't know. I mean, because Ethereum has, if you're familiar with Ethereum's plans, they do plan to lower gas fees, increase transact. You know, I think one of the updates in 2024, I think it was, I don't know if it was the Duncan update. I forget which one it was. It was around February or March. It was an update that was really meant for layer two. So where Ethereum kind of realizes, okay, we're slow. You know, layer twos need to be here. We need to incentivize them. And so that happened. So I think the altcoin space as a whole is going to become less volatile. And I think there will be altcoins that have diminished downside compared to what you would have seen in the past, but also diminished upside potential. And like, I think the 100x today is like elusive. But in the last cycle, it wasn't as elusive. And the cycle before that, it wasn't as elusive. I feel like if you get a 20 to 30x, that's incredible. And if you compare that to any returns you're going to get out of the stock market, it's off the charts. I think as we go into the next cycle, hypothetically, if there is one, right, which I think there will be, maybe a 10x or a 5 to 10x is like the new 30x. You know what I mean? And then over time, it just becomes like the stock market, which I think is a bad thing and a good thing. It's a bad thing for people who want to make quick gains. I think those days are coming to an end. You know, like I mean, it'll still be a great space to make money, but I just think it'll be harder and require more discipline. But at the same time, I think we're reaching into days of stability. Like, I don't expect when Bitcoin goes into a bear market, presumptively, that price is going to go to like 10K or anything like that. I think we're going to see diminished downside because of the ETFs, institutional investment, things like that. Ethereum, same thing. We got a couple questions kind of coming in. There's quite a few of them. Tyler Durden, since alts do not have ETFs, I think some of them will get ETFs, like Solana might, for instance, but I don't think we're going to see like 100 ETFs. Nor do I think an ETF is necessarily sort of like a green light that this altcoin. Well, I mean, it is and it isn't, right? I mean, Corn has an ETF, right? So I don't know. Are we getting?
Yeah, you never really know. I think this is an interesting question with the super cycle, and I think this actually dovetails a little bit into my kind of longer term thoughts also on alts, because I do agree. Like I don't think crypto is going away. I think it's going to exist. It's just that I think there will be a big cleansing in the next cycle. And my kind of broader view on alts is I feel like the market is still trying to figure out what the kind of killer app is on a blockchain. Like Bitcoin's kind of solidified itself as being like the store of value use case. Like that's there, but kind of inherent to that, there can only really be one of those. You can't have a billion different stores of value. It doesn't really work.
Yeah.
And so everyone else is trying to kind of figure out like what is the killer use case of having these decentralized blockchains. And I still remain optimistic that that's going to get figured out. And I think, frankly, probably one of the things holding us back was that because regulation was so, well, there wasn't really regulation, and it was regulation by enforcement, and it wasn't clear what you were allowed to do versus not. People haven't really been able to do a lot of experimentation in a good faith way. Like there've been plenty of scammy experimentation that blow up, like Terra Luna, but you haven't really seen serious actors get in and try to do serious things because they're too worried about getting sued by the SEC. It's not worth their time or their investment to do it. Yeah. I suspect under the current administration that might change, especially as there might be a little bit more clarity coming up with that. And so I think it's going to probably end up being the case is that I actually think there could be a really interesting market dynamic that could start happening once those killer apps come out, where the thing that's a bit unique about crypto relative to like companies going public in the stock market is that even though you do have venture capitalism and all that kind of stuff, it still is the case that retail is able to get in at a lower level often than what would happen like in companies going public, where it takes a long time for a company to be able to go public. By then, all of the kind of private investors have already had their chance to get in there. And by the time it actually gets listed on the stock exchange, it's oftentimes way higher up. You're not really getting in early at that point.
Yeah.
Whereas, especially if some of the regulation issues gets cleared up, and you will see projects actually launch without just a bunch of VC money, but actually use their tokens or whatever as part of the funding, you actually could see a situation where some of those actually you're able to get in at a lower level. And I think that could just be a very interesting scenario where I think on average, and I agree that volatility will go down, there still might be those kind of niche opportunities where people can get in earlier than they would be if this was like a traditional company, and then be able to ride promising projects that actually do these more serious things down the road. I don't know if this cycle is when we're going to start actually seeing that stuff. It might take kind of like a .com wipeout in the altcoin space to really reset things, and then the actual serious players emerge out of that. But that's kind of my longer term view. Is I do think altcoins are going to struggle if we never figure out that product market fit. I think meme coins are kind of the market saying, we don't think there's any use case, therefore screw it. We're not going to pretend there is one. We're just going to make these garbage coins and then try to pump them. And that's where I think the market's really kind of waiting for people to kind of come in a more serious way and start leveraging the technology in a new way that actually is better than Web 2. And I think there are ways that will happen. It's just that no one's done it yet.
Yeah, the space now is still highly speculative, and I think this is just part of the maturation cycle. Hopefully, right? Hopefully, altcoins do more than just suck liquidity out of retail and in a pyramid scheme like way. Somebody said something about once we're in full-fledged quantitative easing, Fed starts loading into balance sheets. Alt season is here. I mean, if I look at the altcoin season index, we're in no man's land right now. After a little spike up into it. I'm still optimistic about an altcoin season, a massive one coming this year. I think it is likely to occur. I like what I'm seeing here where we're holding these range highs on this pullback. So, yeah, I don't know what your thoughts are if we're going to have an altcoin season.
Yeah, it's a good question. I mean, I think we will. I just think that it might be a little bit more selective than past alt seasons. Like, I think past alt seasons, you kind of throw a dart at the board and then whatever you bought is going to go up a lot. I think this time around, it might actually be more about buying the ones that maybe either have some really good narrative going for them, have some other, kind of advantages, or just are better quality and they'll do well. Whereas I think a lot of these kind of, especially a lot of the garbage meme coins are it's no way that 30 million meme coins are going to rip. That's just not possible. It's not going to happen. It's going to be the case that's probably going to be more selective. And so I think positioning might be a little bit more important this time around than last time. But I do think that we will get one eventually, especially as sentiment keeps getting more and more bearish about it. I think at some point we're going to.
Yeah, I agree. I agree with you. And we've already seen altcoins, not move as aggressively as they have in the past. Some of that's due to a newer tokenomics. I would say it's a newer tokenomics model. I mean, Solana had it, Chainlink had it, but a more prevalent tokenomics model that favors VCs and over retail. And I think the meme coin mania is kind of a reaction to hey, you guys are taking all the profits before we even get in. Things like things like tokens like Ondo, for instance, or Aerodrome. They were VC infested, or Celestia, for instance. And you could see how or Trueflation is another one that just killed people. Where VCs got in really early, the model was set up more like a maybe similar spirit to like a stock model, maybe. I don't know. It's different, but maybe some more similarities to that. The tokenomics were pure garbage for retail. So those altcoins, I don't think are going to do. I'm not saying Ondo won't do well, but you're not going to get 100x out of Ondo at this point.
Right.
So yeah, I agree with you. And then there's garbage meme coins and garbage altcoins that may just simply be dead. They may already be dead.
Right. Yeah.
So yeah, will you share your picks? I already do on my channel. I mean, I talk about altcoins that I feel confident about it in my Telegram group. We discuss, we've been talking a lot about the virtuals ecosystem in the past month and AI agents, things like that. I think Mark, you do too. You talk about altcoins, right? Like, I
Yeah, I
mean,
talk about alts, and I don't necessarily, so I don't necessarily pick in the sense of like, I think that this altcoin is like better as like a fundamental project necessarily than another one. I kind of let folks make that determination for themselves, because there's just so much when you start getting into that world. Like each altcoin has its own community that's a diehard fan, and then you say anything that's against it, then it starts this whole flame war, and it's not really worth it. So what I'll more talk about is like if there are alts where the data are starting to look really good, like the setup's starting to look really nice, I might tweet about that or talk about that on Discord or on my YouTube channel. But I'm not going to like, I feel like everything's so data dependent that I'm not just going to sit here and be like, oh, if you buy this, it's guaranteed to be one of the ones that's going to like rip. Because that's just not the way it works. Like things can change on a dime. Like things a month from now can look totally different than they looked in the current moment. And so that's where it's kind of, I generally stay away from trying to make that kind of prediction, because the last thing I want to do is for people to hear me say something, become a bag holder of some not meme coin, but some altcoin that ends up having some disaster happen to it, and then everything goes sideways. So that's why I take a much more data-driven approach with altcoins. I kind of see them as being a place to be for a hopefully good time, but not a long time, and then kind of trading in and out from that, more so than long-term holding.
yeah, and I think with altcoins, it depends what your goals are and what are you trying to achieve? What's your risk tolerance? You know, and I think like you can have criteria that you use to hold an altcoin. How do the tokenomics and fundamentals look? How does the chart setup look? How does it look, like we said earlier, against Bitcoin, Ether, Solana, you know, like whatever the hot thing at the moment is. And yeah, I mean, there's a lot of criteria you could look at. You could look at, you know, how well is it performing on its, you know, on certain moving averages or volume and things like that. So I think when it comes to altcoins, technicals are very important, and you don't want to just go off hype. I mean, hype is what drives crypto at this point. I don't want to, you know, like I don't want to like say that fundamentals matter, because they kind of don't in a mania market. But at the same time, realize what you're getting into. Have the VCs already got 100x? Is a fully diluted value at like outrageous amounts, whereas the total market cap is still like way below it? Are there going to be massive unlocks coming? So those are some of the things I look at. And I'm with you, Mark. Like I definitely have been a little brazen with recommending altcoins here and there, but I definitely live with a little bit of regret about it. And maybe that's just because I'm a bit of a noob as a YouTube guy, compared to someone like you who's been around for a few years. So I'll probably learn from my mistakes this cycle and make improvements. But yeah, it's difficult. There's so there's thousands of altcoins being released every day. I mean, it's become a little bit insane. Mark, I want to thank you for taking time out of your busy schedule to come join me on Crypto Simulation Theory on this live stream. I had a great time discussing Bitcoin, Ethereum, altcoins, and all the other stuff that we talked about. And if people want to sign up and join Polarity Digital Pro, do you have a moment to just show them how they would go about doing that, and maybe talk about what Polarity Digital Pro would what includes? Because one of the things I found about joining your service is that the price was absolutely, like, I don't want to say what my price is, because it may have gone up since then, but you know, like the value you offer for the price that you guys have it at seems like a steal.
Yeah, and that's been intentional, at least so far. So with Polarity Digital Pro, what you get, so it's $15 a month, $130 a year at the current pricing.
Same price that I got it at.
Yeah, and we've been intentionally holding it low because we kind of want to give early adopters a good value. Like we think it's worth quite a bit more than that, frankly, but we want to let people get in at a good price, especially the people who've been joining early and been supportive. We don't want to be, because frankly, when you see the prices, I mean, some people charge us like egregious prices in the crypto space, and we don't. We want to be, you know, our tagline here is institutional analysis for the retail investor. We want people to be able to afford to use it. We don't want to be pricing people out and only trying to tailor to people who are willing to spend insane amounts per month, because that's just not really what we got in this to do. But if you're interested, and if you sign up, what you'll get access to is all of our different models for many different assets. I think we're over 80 altcoins now that we have models for. We also have Bitcoin, Ethereum, all the main ones. Bunch of different models here. Talked about a few of them, but we have more. We also have on-chain data for Bitcoin and a variety of other altcoins as well. Not all of the altcoins we have on-chain data, but a good chunk of them do. And we have some other things there as well. And we have a Discord channel where we have a members version of that where we chat about the market and things like that. So if you're interested, check it out. The URL is polaritydigital.io. So if you want to check it out, you can just go ahead over there. And then this is where you would go, where you can then sign up for the pro plan. And that's the current pricing. And if you buy it at this price, it's locked in forever. As long as you don't unsubscribe, it'll always be $15 a month or $130 a year. That won't ever change.
Yeah. Thanks for sharing that. I love your site. I love your tools, your guys' attitude to analysis. It's great that you have a team, because I think a team really outbeats or outperforms just a single individual. That's our philosophy at Crypto Simulation Theory. There's no gurus in our channel. It's just different people with different perspectives. So, and I agree. Yeah. Zenotic, the pricing is so cheap. Permanent place for my TA. I don't really follow hardly any people on YouTube anymore, because I'm so busy with my channel. And I think your subscription is the only one I even still have, because I just find your tools valuable and I share it with my channel. I'll look at your UDPI, TCI, forecast model. Great stuff. Well, again, Mark, thank you so much for joining me. I hope we can do this again. I'd love to have Jay join us. Maybe the three of us can do this sometime. Jay, if you're listening, read my DM. No, he's been busy. But yeah, if you want to join, I always forget which way to point it is, but down below there's links to Mark's Upside Down Data YouTube channel, and then also his Polarity Digital Pro or Polarity Digital website. You also have a free version people can join too, like you were showing. So be sure to click on those and join that. I also have links to my Crypto Simulation Theory YouTube and Telegram channel if you want to hop in there as well. Everything's completely free on my channel too.
Yeah,
so
definitely recommend doing that if you haven't already, because I would say ditto. Your analysis is great. And I think we have, as you've been saying, a very like-minded way of approaching the market. And I hope that voices like yours can be elevated, especially just as crypto gets more and more crazy sometimes and emotion drives the space and things get kind of crazy. Being able to center it on the data is always valuable, in my opinion. So yeah, very, very appreciative of your analysis and being one more voice of, in my opinion, reason in the relatively wild space.
Yeah, thank you. I think, channels like ours are important because they're 90-something%, and not to sound arrogant or anything, I'm not really trying to. It's just there's a lot of people that are just simply there to pump and dump on their followers or lead them astray. So, okay, well, again, thank you, Mark, and thank you to those of you who joined us on the live stream for taking time out of your Sunday and engaging with us. We had a really nice turnout today. This live stream will be available on my YouTube channel, and I'll make announcements in the different Discords and Telegrams to so people can find. You could actually just click on the link that I already posted in Discord or Telegram, but I'll follow it up. It'll be everywhere. And none of what Mark or I said is to be taken as financial advice. Okay, this is just our perspective on the market. So that'll be it. Thanks for jumping back into the simulation, and we'll see you again next time, guys. Bye.
Take care, everyone.